welcome to the Beyond Wealth Advisors monthly economic update. It's August, it's hot. I'm John, CEO and Private Wealth Advisor, and with me today is Kelly Manning.
Good morning, John.
Good morning, Kelly. So today we're asking a big question that's really been making headlines, and that is AI going to come to the rescue of the U.S. economy?
Great question, John. Over the past couple of years, the Federal Reserve has raised interest rates aggressively to fight inflation. Normally, that cools the economy quickly. Housing slows, business investments pull back, and we risk slipping into a recession. But this time, things look different.
Yeah, so different. So Kelly, why do you think it's really playing out differently this time?
Well, back in 2022 and 2023, a lot of economists expected a recession by now. Historically, high interest rates hurt construction and manufacturing first, but instead, certain sectors have stayed strong. At first, it was manufacturing plants leading the way. Government incentives, like the Inflation Reduction Act and the CHIPS Act, kept that momentum going. But John, what has changed more recently?
Yeah, it's really quite fascinating to kind of see what's happened, and the spotlight has really shifted. You know, manufacturing plants aren't the main driver anymore. The new star is this information processing equipment, really the backbone of artificial intelligence, what we call AI. And, you know, what we see happening there, first quarter of 2025, we saw the biggest boost from information processing equipment since 1980. This really includes computers, servers, really any AI-related hardware.
That's huge.
Yeah.
Wasn't some of that due to companies buying before tariffs kicked in?
Yeah, certainly that probably had an impact. We forget how fast that's gone and changed. But even before tariffs, imports of this equipment was really on the rise and surging, and it's really stayed strong this year. And that tells us that companies see AI as a long-term game changer. They're investing heavily now, even though costs are higher.
Yes.
So Kelly, that's the investment side, right? So how's the labor market holding up?
Unfortunately, John, the labor market is cooling off. The July jobs report showed just 73,000 new jobs. Earlier months were revised way down. Over the past 3 months, we've averaged only about 35,000 jobs a month. And with government buyouts starting this fall, we can see negative job growth by year end. So, John, what happens if hiring slows too much?
Yeah, well, if that happens, incomes drop, consumer spending falls, and the economy could tip into recession. And that's really true no matter how strong this AI investment is.
Which raises the big question. Can AI alone keep us out of a recession?
Well, it's certainly trying, but the short answer is probably not. AI is certainly giving the economy a boost right now. We see that across all industries. But it really can't offset these big drops in housing, consumer spending, and other investments.
So it sounds like it's kind of like having one strong engine on a boat while the others are failing. You can keep moving for a while, but not forever.
Yeah, that's a great analogy. So, Kelly, what's the solution? What do we see happening going forward?
Well, many economists say that the Fed should cut interest rates sooner rather than later.
Well, wait a second. Cut interest rates? When have we heard anybody talk about that, right? So, if rates stay too high for too long, even the strong sectors like AI could definitely be negatively impacted.
Well, exactly. AI is buying us some breathing room, but the window could close quickly if the rest of the economy weakens. So, John, do you think AI's impact is just about technology?
Well, not at all. It is starting out, we're seeing productivity gains in manufacturing. That means more output without the higher costs. We see it really across all sectors. It's a win for companies, consumers, and certainly the economy.
So to wrap up, AI is helping keep investment and maybe the economy above water for now. But it's not a magical solution.
No, it's certainly adding, and we have our eye on it every day. But we need strong job growth. We need steady consumer spending. We need stable housing. And AI really works best when the whole economy is pulling it all together.
So we'll keep track of the numbers, the Fed moves,
Yeah.
and the momentum in AI investment.
Absolutely. And we certainly want to thank you for joining us today. We definitely are keeping an eye on AI. It's something that is penetrating really all aspects of our lives these days. And we want to pay attention to that and bring you good and updated information. So with that, we're going to wrap up. We hope you're staying cool. Hope you've had a great summer. Maybe kids are heading back to school.
Back to
I know
school.
yours are soon.
Yep.
And we look forward to seeing you next time. And with a new topic like AI, it's a great opportunity to connect with your advisor. Maybe take a few extra minutes, see what you own, what's in your portfolio, how that's impacting you personally. So with that, we say thank you, and we'll see you next time.
Thank you.